Good evening. This is Peter from ShadowTrader Weekly Options Advisory. And I thought I'd do a little mini ShadowTrader video weekly. Those of you who have been with me for a while, you remember those. I used to do those every weekend. I haven't done them for a little while now. So this will kind of be like a little mini ShadowTrader video weekly. So what I'm thinking here is the market's going lower. And the reason I say that is because we have now closed a daily bar on the SPX cash below the 61.8. So nothing is guaranteed, but what that does is it increases the odds greatly that we retrace 100%. I'm a big believer that once we close below the 61.8, there's a pretty good chance that you go the whole route. Now, it would be disingenuous for me to all of a sudden start talking bearish without acknowledging that I was actually quite bullish very recently. And I actually was positioned kind of bullish. And the reason I was bullish, which to me made perfect sense, was the fact that look at how many touches there are here of this level. See this one? And then it did it again here, almost. And then look at this fourth one here. This high here actually took out this high. And so my idea was, okay, it's got to be going to the trend line. And at the same time as we got this right here, look at the 821 right here. This is 8 EMA exponential pinching up through the 21, which would indicate that prices would be going that way. Well, it wouldn't be a market if it was that easy, right? And of course, the market said, no, I don't think so, Shadow. I'm going the other way. And it completely collapsed. So I was definitely wrong about that. I was positioned long in here. But good news is because of the way that I structure and how I kind of comport myself, for lack of a better word, when I do all my weekly options trades, etc., we didn't lose any money. So if you want, this is also something I used to do in the ShadowTrader video weekly, where I would show you exactly what I'm doing currently. These trades are open. Feel free to go through and reverse engineer this stuff. And then notice that this is directional. SPY, it's about the worst thing you could possibly do, right? Before the market collapses, is getting long SPY long call verticals. But if you add this up, didn't lose any money. It's going to be basically like a little loss of probably $100 right there. Also, this Microsoft, this one here is going to be a winner. This Adobe is going to be a winner. And this XLP, the jury is still out. I'm actually long the staples, but you'll notice, and this is kind of a novel idea, actually using a put for the intended purpose of hedging as opposed to speculation. Wow, what a novel idea. I barely could have even have thought of that myself, right? I'm so used to using these weekly options as speculation. So anyway, I was dead wrong on direction, but we're still sitting here at our high watermark for profits as usual. And so no harm, no foul. So if you want to join me in this advisory and see how I sort of structure things so that we get out of things unscathed, even when we're wrong, feel free to hit the link in the description below. All right, so that being said, as I was saying, I think the next move here is down. The wild card, as always, is the NDX because it's never matching up with what's going on in the SPX, not BDX, that's the wrong ticker. It's just constantly out of sync, but I've put the Fibonacci retracement on it as well. But I want to show you a couple of technical things going on here with the NASDAQ 100. So first things first, what I think was the more powerful signal here, when I was focusing on the fact that I thought that the S&P was going to break out over that little top and then push up to this area. Notice what was happening in the NASDAQ. It went right to it, and I thought it would go a little bit higher as well. So obviously, the takeaway from this is that you have to know that there's a hierarchy to technicals, and it seems that this sort of setting up, coming right down to the downtrend line, in hindsight, of course, totally admit this is hindsight, is more powerful than breaking out over the shelf, right? We had the S&P looking like this with the 1, 2, 3, 4 touches, and I thought we were going to break through that and go higher, especially because we got the pinch. We also got the pinch here, but there's a hierarchy to things. And moving up to a prominent downtrend line in the NDX is, I guess, more powerful than the S&P breakout, so we fell apart. Now, obviously, there's other factors in play here. People who are watching this say, oh, no, but it's all about the 10-year. Look at interest rates. Of course it is. Everything is all part of it. But I like to keep it simple. I like to have a technical explanation for everything. Obviously, the TNX is not helping here. You can see we're pushing very, very close to 5. And if we look at a longer-term chart of this, there's potential for selling to keep going up to about 5.3. And of course, I can't get it on this Stacy trade chart, but check it. You'll see. Look on a chart, and you'll see that there's about a 5.3 resistance there in the TNX. Right, the TNX is probably headed up to about 5.3% before it stops, and I would expect also that's going to keep the pressure on the technology side until that does come up to that resistance. But anyway, back to the NDX real quick. As I was saying, I did put the Fibonacci on this one just like the other one. If I change this back to a daily chart, and I just look at just a smaller term, just a couple of years here, and we'll make it a little bit bigger so everybody can play along at home and see what's going on. You can see that the close today is sitting right on the 61.8. And what's even more important is, look, you've got an uptrend line right here. So it's probably going to be a little bit more weakness in the NDX, but, and this is important, do not initiate shorts here on the first test, because it more than likely will do this first, and then when it retests the line, then you can short for the move here. Now, if it just drills through it, I would suggest to you use hourly bars. Make sure that an hourly bar closes below this line so that you know that the sellers are in control and the move is probably going to be down to the 100% retracement of this move down to here. All right, that's basically it. Be careful out there. There is a lot of push-pull in this market. It means that these two markets tend to be very, very out of sync. We've seen a lot of divergence between the NDX and the SPX in this market recently, and we've also seen tons and tons of divergence between the 11 sectors. I don't have time in this video to go through all of them, but it's really a good exercise if you can just keep looking at the daily charts of, you know, XLK, XLV, XLY, XLP, XLC, you know, et cetera, et cetera. Look at all of your 11 sectors that make up the S&P. Very, very important. And that will also help you very, very much and give you a clue as to what's going on, because you want to be seeing if the heavyweight sectors that are making up more of the S&P, such as technology, healthcare, financials, consumer discretionary, etc., if those are looking bearish, then the market is probably looking bearish as well. Hey, this is Peter from Weekly Options Advisory. I want to thank you for watching my video. If you enjoyed this content, please hit the like and subscribe buttons. And if you'd like to trade live with me every day in real time, then check out the links in the description below. I wish you good trading, and I'll see you in the room.